Hey guys, welcome back. In today's video, we are talking about the 300% short interest, how AMC is still a bargain, hitting $13 within a week, and many more in this video. First, we're taking a look at this. Just a reminder, AMC short interest is still hovering near 300%, even by conservative estimates. So this is based off something we talked about in the past, where essentially using some data, we were able to kind of find out what the short interest was for AMC. And this is talking about short interest, including FTDs, including some other short positions, and not the official short interest reported. You can see there's a big drastic difference. The official short interest as reported is 24%. Yet, when we find out with the FTDs, when we find out with the naked shorts, we can see that AMC was at 1.58 billion, so over 300% short interest. Now, what I still want to talk about this is that this is still a very conservative estimate. When we went over this, we saw how they were able, in terms of what data they used to derive to this conclusion. And that was still limited. There was still many more data in which they didn't dig into, which would still have an effect on the short interest. So this is already exposing what is going on for AMC, but this is just to say that right now, even as of right now, and we're seeing how they're shorting even more, we're seeing the short percent interest still over 300%. And so that's why we're still facing the manipulation, and we should be expecting that as well, because we knew going into this week, they needed to suppress us more than ever. If we take a look at the dot pool usage, you can see starting off for the day, 2 hours into the market, we were seeing 67% in terms of off exchange. As we see the market ended, we can see 68% with 22.2 million volume being hidden away. So this is not surprising. Last week, when we were able to see AMC go up, we were seeing 60% short interest off exchange percentage for AMC. Now going to this week, they are already expanding on that. They're increasing the off exchange, and that's because they knew if they don't, the AMC is going to go up further, and that's what they are worried about. I'll talk about later on how you're already seeing how they're being affected in other areas because of AMC and why they need to double down on suppressing AMC. But here you can see the reason of what we are seeing right now. Also, one thing to mention, you can see for the ask here for AMC, we are at 393 with a 391 spread, and this is something that we see for AMC constantly. So let's talk about some of the reasons for why they feel the need to double down on suppressing AMC. Firstly, something that I found interesting was that in after hours, we saw AMC spike up to 2.19. So that is already given the understanding of what was going to happen to AMC, of what they were trying to prevent, because they knew if AMC was going to go above $2, especially with the $2 calls that we were talking about, that would then take AMC to a whole new level. So they were trying to prevent that, in which they did, but that's at the cost of using so much liquidity that they're covering from other positions. And we are able to see what positions they're covering and how the short squeeze is already starting. But this is the big reason for why we're already seeing the off exchange percentage go up, why we're seeing the short percentage to go up as well, because of some data. Another thing is obviously because of the fundamentals, and we talked about how we saw some good fundamentals because we saw the Odeon nodes being delisted. And you can see people were expecting a pop, including me, because AMC is doing exactly what a leverage company should be doing when rates and credit markets allow for it. And AMC cleaning up the balance sheet without dilution or any bankruptcy talk or drama is, as Adam Aaron might word, unambiguously good for the company. Now, essentially what this is we saw how well AMC is cleaning up the sheet, and we talked about how this is going to attract the fundamental investors, the investors who are looking for undervalued company, who are cleaning up the balance sheet, who are going to see drastic improvements. And so we were expecting more capital to flow in. Now, bear in mind, we did see new capital flow in. That's because we knew from the inflow outflow, there was capital flowing in. The reason why it didn't have an effect on the price as we expected is because unlike last week, we saw the off exchange actually increase this time. And so that's why, that in terms of what they're trying is that they see good news for AMC. They know we are expecting AMC to go up. So when they prevent that, they're then able to go and talk about that. They're able to attack that point. But we know the reason for AMC not going up is not because people are not buying, but rather they're hiding the buy pressure. Another big reason for this is just like what we talked about with the $2 calls. And so what they're trying to do is obviously push us to a previous low, and they're trying to prevent the $2 calls from going into the money. What happened last week, they're trying to prevent that happening from this week. Last week, we obviously broke above the 150 call and we were able to stay above it. And we already saw the consequences these shorts face because of that. This week, they know that if we're able to then close above $2, it's going to create the same effect as last week, but then even bigger. So now that's what they're trying by preventing AMC from going to $2. So you can see how right now, they have more to worry than us. They are trying everything they can to prevent AMC from going up. And we are seeing this in full effect right now. If you want to see some examples, the big buy orders got absorbed by sell order, which hit every bid to push AMC to 1.8. So this is what we're seeing, how they're trying to absorb the buy orders, how they're trying to stop AMC from going up in price. And we've seen this already. We've seen the amount of sell wars they're trying to create. We see how much people are buying. Yesterday, we were talking about the large buy blocks. That's because people realize the undervaluation of AMC. But we are met with the constant selling. And this isn't selling done by the apes who have held for 5 years. This is selling done by the short sellers who are creating more shares to throw it into the market because they can't afford AMC to go above $2. They can't afford AMC to break them out. They can't afford AMC to go up to 250, even though we are extremely undervalued, even though the fundamental says we should be 10x, 20x of where we are right now. And if you take a look at some of the technicals, now today's price, we did talk about it yesterday as well, and you can see the 167, and today we closed at 167. This is something we mentioned yesterday, and what we have to see is that from the same user who talks about the weekly true open is 186. So anything below that for the week is value. And when we do move, there's a decent probability that we can hit $13 within a week. Now, one of the things we talk about on this channel is that we have price targets, we have understandings, but we can never pinpoint an exact time. But the reason why I'm mentioning this is because with the volume, with the understanding, we have so much pressure being built up right now. We have the understanding of right now, we are seeing how short sellers are covering in other positions. We're seeing how their liquidity is running dry. So if we see the run starting for AMC, we can easily see it shoot up. And so what we can see is $13 within a week. And what we can also see is that for it to go even higher than this. But that's the position we're in right now. So when you understand this, you realize why the shorts don't want us to buy, why the shorts don't want the buy pressure to hit the market, why the shorts are manipulating so much, because they've realized what AMC is about to do. You can also take it from here. We're understanding that AMC is obviously pulling back. And again, this isn't a massive sell-off. We closed at 167. We knew that this was the price that we saw last week, but so this is something that we are expecting to. And to me, to my understanding, I see it as this is just giving other investors a chance to hop onto AMC because they don't want to miss out. Now, furthermore, we can see from here as well, AMC appears to have plenty of room to run, and that too at a fast pace. So this is from Zacks Equity Research, where they talk about AMC, and you can see the title where they talk about AMC still a bargain stock. So this is what we're seeing for AMC right now. What people used to call AMC as the worst stock, when people to say to run away from AMC, now they're saying it's a bargain stock. Now they're saying that you are buying an extreme discount. You are getting the best deal possibly here right now with AMC. And so we can see how the narratives has changed on AMC. We can understand what they think about for AMC. And this is what we've said with how we were expecting investors to come in. And indeed, we did see investors come in because more and more people are realizing how undervalued, how discounted AMC is. But the reason why we didn't see the price jump up is obviously because of the manipulation. You can see AMC is gaining momentum while still trading at just 0.2x sales, meaning investors are paying only 0.2 for every $1 of revenue. With improving fundamentals and strong momentum signals, AMC would have significant room to run as valuation catches up according to Zacks. That's essentially what we're saying. And this is just to scream to everyone about the position, about the world that we are in right now. And again, this goes down to the management. This goes down to Adam Aron, who has gone AMC in tip-top shape. And this is just what we've seen. He has put AMC in a position where they're able to capitalize on the thriving box office right now. There's a reason we're the number one theater in the industry. There's a reason why we have the biggest market share. There's a reason why we're building premium theaters. It's all because right now we're able to catch all of these opportunities that has made AMC great, that has made us see how much value there is, and not just us, but millions of other investors who weren't sure of AMC beforehand. And if the momentum continues to build, you can see for AMC after 457, which we talked about could easily be touched, we can see it go above $11.88. We see it go to $13, and we see all of these targets all being blown off, going to $19.5, $23, and even higher. And that's just what multiple other people are seeing right now. Everyone maybe have a different price target, but multiple different people are seeing a 5x, 10x, 20x for AMC right now. And this isn't even including the squeeze. This is talking about the gamma. This is talking about the FOMO, about the sentiment. And this is even talking about the billions of synthetics that have to be covered. So you can see when I talk about discounted, you can see when I talk about how undervalued we are, of how big of an opportunity we have. This is what we are seeing. Now, what we saw and why the shorts want to bring us down right now, and why especially this week was worrying for them, is because we've seen how previous short sellers are under pressure. We talked about Apollo yesterday and talked about how now they're facing private credit issues, and they were once shorting AMC and possibly still could with the synthetics, and now they're facing the pressure. But that isn't all, and I wanted to bring your attention to this. So this isn't to say to put your capital into BYND because of what's happening. Again, none of this is financial advice, so do take advice as a grain of salt. Make sure to do your own due diligence and research. However, I did want to bring your attention to what is going on in other stocks because of what it means for AMC. Firstly, we're seeing the unwinding. So we saw Beyond Me go up 41% in a day. Now, bear in mind, they're in the same basket as AMC and GME, and they face some of the same short sellers. And earlier, you would catch me saying about how AMC is creating pressure. And this is what we're seeing. AMC last week has done exceptional, and we saw how much pressure that created for short sellers. So for short sellers to continuously suppress AMC, they will need to relieve collateral, they will need to relieve value from other places. And where did they do that? Other stocks that they have severely shorted, like stocks like Beyond Me. So we're seeing a literal covering of Beyond Me because they needed that value to suppress AMC. And this is what we've said with how AMC is applying that pressure. And the fact that they would rather cover Beyond Me than AMC obviously goes to talk about how much value is hidden behind AMC. Because if they were to cover AMC, you will have to add a zero behind this one. You will see a 410% move up for AMC. And that's what they're trying to prevent. And if we see for Beyond Me as well, even with this pressure, potentially we can see $10, potentially $55. And that just goes on to talk about how much value there is. And that's just for Beyond Me, a stock that's not as heavily manipulated and not as many synthetics created as AMC. Furthermore, another one we talked about is obviously Avis. We talked about the ticker symbol CAR, and we see them unwinding. You can see going up to $612. And this is what we talked about. Now, the thing that's interesting about this is the potential there is, and it gives us a comparison of what's going on. Firstly, one call option contract for the $65 call is now worth $55,000. So if you had 300 contracts, that's 16.5 million profit. Now, this will feel similar because we're seeing the same opportunity for AMC right now. The ones who are buying out of the money calls, the $2, the $2.50 for AMC. The one who has bought the in the money call, wherever it's deep in the money, like 0.5, 1, or the current 1.5, which is obviously not as deep in the money. These are all going to be having massive effects when we see the same situation being unfolded. And so the shorts saw what happened to CAR, so they're trying to prevent this from AMC, because at the end of the day, the stocks that have been manipulated the most is AMC and GME. What you're seeing in Beyond Me, what you're seeing in CAR, when that happens to AMC and GME, you're going to be looking at the same thing, but 10x, 100x the size of what is going on. And you can see, the reason why I say this is because they talked about how CAR squeezed back in 2021 and Wall Street was claiming the shorts has closed. But here it is squeezing again 4 years later, already at a new all-time high and straight up for the past 30 days. We're literally looking at what's going to happen to AMC and GME in the future. And this is pretty much the same thing. Stock that they claim to have covered, yet it's squeezing. And again, this took 4 years to happen. And this is still a stock that isn't even facing the same amount of manipulation. So you can understand how difficult it is for AMC to squeeze, but we know that when it does squeeze, it's going to go a heck of a lot higher. We also see how they're doing this and why it could potentially happen to AMC. Because firstly, the rental company that blew up, expected 600% in a month, is because 2 investors own over 100% of the stock. So we're talking about investors owning more than what the stock should have, over 100%. Does that sound familiar? Yes, because AMC, because GME is the same thing. But what we're seeing here is that investors, of course, is more than 2 investors, is 4 million investors who own probably over 1,000, 10,000% of the stock. And so that's why I keep on saying about we're going to be seeing the same thing happening, but on a 10x scale, on a 100x, on a 1,000x scale of AMC. And some of the things that we can talk about as well is that, so the hedge fund that triggered the squeeze in car was Pentwater. Now we're seeing how potentially the same thing could be happening, because we are seeing how Pentwater was in this, but now is Discovery. But also something that I saw mentioned is the fact that if Pentwater was in this and they did this to car, it might have been that they were also trying to do this for AMC, but obviously it's a lot more difficult because there are a lot more synthetics that needs to be brought up for them to create this. And so there's something obviously going on there, but it just further confirms to us what is going on. Now, we're also seeing how GME is no longer day tradable with unsettled fund. And this is what we've seen. This is again the liquidity that is coming in. This is what we've talked about, how they're trying to suppress us, they're trying to manipulate us by applying all of these things, by stopping us from having the ability to continuously put pressure. This is what they're doing. And if they're trying to stop pressure from hitting AMC and GME, especially buy pressure, it just goes on to talk about how the other side, the other end, they don't want to see us go up. And that really talks a lot. If we see another fundamental for AMC for the movie, we're expecting online movie ticket market growth go from 24.55 billion to 40.63 billion. So this is obviously talking about the compound annual growth rate and about how good it is and why we understand this is going to be good for AMC, especially with how we're already seeing AMC doing for Q1. Going to Q2 is also going to be even bigger. We already saw last year how well we've done. Now, we're definitely excited to see the earnings for this year, but we already have an understanding of where AMC could see themselves land. For HYMC as well, we are still seeing how HYMC is growing. We're still seeing the positives that are out there, and you can really expect another massive run up for HYMC, and that's going to affect AMC as well, and that's what we want to see. Now, Brent oil. We're seeing this surging $100 because of the whole geopolitics, US-Iran peace talks. Now, the reason why this is important isn't oil per se, but the volatility that it causes. And right now, oil is the measure of that. The reason why volatility is important is because we're seeing funds like Citadel who are losing over 8% in a month because of this. And so as we're seeing the volatility increase again, we're going to be seeing them lose even more money. And then on top of this, we're seeing how buybacks are coming to the US market. And it feels like people are trying to recover the market. But then it goes on to talk about how we could see this happen for AMC as well. And then finally, we're seeing some justice for MMAT and MMTLP investors, where FINRA ordered to hand over 25 million trade records. So this could be something that could be extremely crucial, but we'll have to wait and see. As always, this is not financial advice. I'll catch you guys next time.